Hello, everybody. Hope you've had a nice weekend. Oops, getting ready for the week ahead here. I think we're going to have a pretty tradable move one way or the other. My guess is that it's down. Now, let me explain to you why I think that. The S&P 500 is a combination of 11 different sectors. Okay, and sometimes different sectors are in the driver's seat. Sometimes it's healthcare, sometimes it's financial, sometimes it's uh, you know technology. But what happens is sometimes the market gets to these particular levels of importance and it makes a move. It breaks one way or the other. Now, what I'm doing here is I'm looking at the SPDR ETF. The SPDR ETF is an exchange traded fund that is designed to track the S&P 500. We could look at the S&P 500 index, but it's hard to trade unless you're a big institution and you could trade futures or options. So we look at the SPY. It's called SPY for obvious reasons. The symbol is SPY. SPDR means Standard and Poor's Depository, uh, Standard and Poor's Depository Receipt. Whatever. What the hell? It's one of those things. So there's a reason why it's called SPY. And what we do is we look for important levels in the SPY, and then we look at the 11 sectors that are in the S&P. And that's going to give us an idea of whether the market is going to go up, down. I mean, obviously, it's not a guarantee, but it's a way to kind of look behind the scenes or underneath the hood. Now, here is our SPY, and look what has happened. Yay, me. I've been talking about this for a few weeks now. We're going to get to 443.50. There's going to be support. What was the low trade on Friday? 443.34. Okay, I'm sorry, I was off by 15 cents. Now, I'm not sitting here to sound like an arrogant Wall Street D-bag, but what I'm trying to do is teach you as my students that there are some price levels that are more important than others in markets. And if you know where they are, it helps you trade. It helps you make money. Knowing where the important price levels are, and it happens in any ETF, any crypto, any stock, there are just some price levels that are more important than others. And I've been doing this for 25 years. Most of the time, I don't understand why a price level is important, but I've given up trying. Okay, it doesn't matter. Knowing where an important price level is like knowing where there's a fork in the trail or fork in the road. I mean, do you know why they built the roads in the place that they did in your town? I mean, in my town, it goes back to Native American days or this or that, and the other thing. All right, anyway, let me go on here before I digress. Check this out. Notice how the level that was resistance here became support here, and we got a little bit of a bounce. And I think maybe we get a little bit more of a bounce, but I think eventually the market's going to go lower. When I say eventually, I'm talking within the next couple of days. There's a lot of things that really look weak. So why is it that the S&P found support at this level that was so precisely resistance? Well, sometimes resistance levels can turn into support, and this happens because of market psychology. There are investors. Clifford, is that you? Sorry, I think I heard my dog. Um, Cliff. Yeah, he's just hanging out. He's looking at me. Sometimes, oh, here he comes. Come on, big fella. All right, anyway, going back to whatever, might I digress? I know it's a Sunday night and you probably want to go watch whatever shows it is you watch. But why is it that resistance level here became so precisely and perfectly a support level here? You can't explain this by, by price earnings ratio, price to book ratio, whatever they're talking about on CNBC or Bloomberg or Fox Business News. Resistance becomes support because of psychology. It's seller's remorse. There are people who sold here who think they made a good move when the price goes lower, but then when it goes higher, they're like, damn, I made a mistake. I want to buy my shares back. But I'm only going to do so if I can get them for the same price I sold them at. And if you have enough remorseful sellers placing buy orders, the level that was resistance becomes support. Now, I'm going to go into the technology sector here, which is the biggest sector in the market. And this chart here, in and of itself, could be a real good lesson. As a matter of fact, I think I'm going to spend most of my time on this tonight. why is it that XLK, and this is an ETF, this is the spider. Oh, I remember, Standard & Poor's Depository Receipt. Okay. Why is it that the level that was resistance way back in December of 21, okay, almost 2 years ago, the very top of the market became resistance in June of 23? Psychology. Resistance. People bought back here, and there are enough of them that have buyer's remorse. They're like, damn, I bought at the top. I want to sell my shares if I can get out of break even. So they place their sell orders at the level that was resistance. This is why when a market gets to a former peak, we get resistance. It's because of psychology. It's not because of what Joe Kern is saying or Stuart Varney saying. I actually like Stuart Varney. I think he's pretty cool. He's the type of dude I'd like to hang out with. Joe Curtin and the whole CNBC crowd, dude, it's over. Come on, man. Bring in some new blood. But anyway, most of the people you see in the media, they don't know what the hell they're talking about because they're journalists. They're not former traders like I was. I should say am. So resistance becomes resistance because of buyer's remorse. People bought back here. We get up to a former peak. You got these remorseful buyers like, damn, I made a mistake. I want to get out. And the level that was a peak before becomes a peak again. You have, I'm gonna slam on the table here. You have to look at a market chart through the prism of psychology and supply and demand. If you don't do it that way, you will never understand what this is about. Because guess what? A chart is an illustration of investment psychology. And guess what? People are not rational. That's why all the artificial intelligence programs they've designed to trade have such horrible performance. Now let's go through this chart a little bit more before I get going. I want to go see if there's any more of the golf on. I know it went to a playoff. Support became resistance. Why is this 164 level important? I don't know. I don't. I'm not one of the market gods. I just don't know why 164 became important. But I know this. It's not because of fundamentals or interest rates or the debt ceiling. Support here became resistance here because of buyer's remorse. There are people who bought here who are like, damn, man, market went down. I thought I made a good move when the price was higher, but now it's down. I made a mistake. You know what? I'm going to get out of this at breaking even if I can. So you have remorseful buyers placing sell orders at the level that was support. If there's enough, what was support becomes resistance. It's kind of a similar dynamic to up here. Buyer's remorse. Some price levels are more important than others. That's just how it is. And if you want to be a good trader, that's one of the first things you need to learn. You need to know where these levels are and whatever it is that you're trading. Look at this. Support became resistance. Amazing. You can amaze your friends with this knowledge. How can this help you? Well, guess what? Say you buy down here and it's going higher and you're like, oh man, I got some money on my hands here. Where should I have my sell order? Oh, this level was a support level. There's a good chance it's going to be resistance. So instead of just guessing, let the market tell you what to do. Let the market tell you, oh, there was support here. There's a good chance it was resistance. So buyer's remorse can turn support into resistance, support into the resistance. Now look at this. As of the beginning of the year, XLK started rallying. And look at the opposite. Resistance became support. Resistance became support. Resistance became support. Resistance became support. Once again, you don't need to be a super secret double probation ninja warrior trader. I don't like this whole thing like, oh, warriors trading or ninja. We're at our class here, stockmarketjobber.com or Benzinga class. It's like we're students of the market. That's the way I approach it. Maybe some people think about like they're warriors. I just don't understand that. Like, are you a warrior accountant? Do you go to war against the IRS? It's just like it's dumb. And if you say you're like a ninja, it's like, oh, secret. No, there is no secret rule to trading. The secret rule is not a secret. It's understanding levels, it's understanding trends, it's understanding momentum, and it's understanding psychology. Why is it that resistance turns into support? Seller's remorse. Why is it that support becomes resistance? Buyer's remorse. This is the psychology. You have to be a student of the market. If you think you're a ninja or some kind of warrior, you are going to die a ninja or a warrior's death. Now, why did the tech sector find support here? Oh, look at this. Lo and behold, it was a resistance level, and resistance became support. Resistance became support. Why is it that a level that was support, when the market gets to it, it rallies off of it? Well, there are investors who want to buy, and they're like, oh, I see the market's coming lower, it's coming in, I'm going to buy. The reason why markets go lower is because there's more selling than there is demand, or there's more shares for sale than there are to buy. And sellers are forced to sell their shares at a discount. They got to offer their shares at a discount. This forces a downtrend. Some of the investors who want to buy are like, wow, market's not going down anymore. Must be new buyers coming in. I better go in there and buy and jump in ahead of them and pay a higher price, because the seller's going to go to who's ever willing to pay the higher price. So anyway, this is why we bounce off of support. And the opposite is true with resistance. There are investors who want to sell, and they see the market is not going higher anymore. Markets go higher because there's not enough supply. And they're like, okay, well, you know what? Market's not going higher anymore. Must mean there are new sellers coming in. I better reduce my price because the buyers are going to go to the lowest seller. So anyway, this chart here of XLK is a really good chart of the last 2 years or so that, I think it does a good illustration of this whole concept of levels. It's not perfect like anything, but if you know where the price levels are, it stacks the odds in your favor. Now, this to me looks pretty weak. I think that this tech sector could break the support and go lower. I think one of the important things to look at is Microsoft. Microsoft is one of the biggest stocks in the technology sector. It's like 22% of it. It is trading at a support level, but it looks to be breaking lower. Notice how the former support was there. All right, so tech is teetering on like this tightrope. The second biggest sector in the market is the financial sector. And, financials look kind of weak. Look at this. No surprise. What was resistance, or what was support, became resistance. It's not a really perfectly clear example of it. But if you go back to last year, look at that. Support becomes resistance. Resistance becomes support. Support becomes resistance. So, financials kind of looks weak, whatever. And I bring up healthcare because that's what I should have brought up before. It's the second biggest sector. The healthcare sector is, guess what? Below resistance. Guess what? It gets to resistance, it sells off. It gets to resistance, it sells off. Remember, this is psychology. Okay? You with me here? Markets sell off or rally most of the time because of psychology, it's not because of news. So what was support became resistance. You got buyers watching, oh, the market's not going any lower. I better jump in there and buy. You got sellers watching, oh, the market's going higher. I better get in there and sell. Forget about what they're telling you on the news, and don't try to figure this out with, price to earnings, price to sales. You're wasting your time. If you want to be a trader and you want to be successful, you have to understand market psychology. And human beings are illogical. A lot of people think, oh, this great traders have this, like secret systems, and they got these models that are great and blah blah blah, and some of them do, but it really comes down to psychology, because you could have the greatest model in the world, but if you don't have the emotional discipline to stick to it, it's not going to do you any good. So look at this. Resistance, market goes higher. Oh, former resistance level. Oh, investors are nervous and they sell and they undercut each other. Oh, get to a level that was support. Oh, investors want to buy, they get anxious, they start paying higher prices. If you look at this particular day here, which was, I think it was Thursday. Yeah, Thursday. I mean, it might be hard to see, but check this out. Look at where we found resistance, like within the pennies of where we found it before. And you can't take this stuff for granted. I mean, people do. How is it possible that this healthcare sector, or any sector, it's worth trillions of dollars, can find these perfect levels, at the exact value. How is it possible that the healthcare sector on April 23rd has the exact same valuation that it did on August 23rd? How is it possible that the healthcare sector lost so much of its value? If you try to look at this through logic, and if you try, well, I shouldn't say logic, because there's different kinds of logic. If you try to look at this through what they're telling you in the media, OPEC did this, or the Mancom did this, blah, 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 you're never going to figure it out. My advice, shut off CNBC, stop going into chat rooms other than mine, and understand that markets move most of the time because of psychology. So the two things I'm really watching this week are what happens with the tech sector at that support. I'm going to bring it up again. Right on an important level, resistance, support. That's the biggest sector in the market is technology. Healthcare is the second biggest sector. Just had a nasty reversal off of resistance. I think the market goes lower. All right. Now, if you're not an options trader and you're like, how can I utilize this knowledge? Well, there's inverse ETFs. You can look at SH, ProShares short. This goes in the inverse way to an ETF. This is an ETF that trades inverse to the S&P 500. So if you think the market's going to go down, you don't need to put your head in the sand. You don't need to hope it goes away. You can make money in a down market. As a matter of fact, I think it's easier to make money in a down market than an up market because markets go down faster than they go higher. Because markets go down because of fear. And fear is a more prominent emotion than hope. And hope is what makes markets go higher. So we don't want bear markets. But as a trader, we can see many opportunities there. All right, everybody. I think I've passed my time allotment here, and I'm going to end my recording. And make sure you check in tomorrow morning at 8 o'clock for our morning research meeting. Thanks, and I'll see you then.